Hi friends, hope all of you are safe and healthy. Right, let us have a look at cryptocurrency. Right, see, cryptocurrency, I don't need to explain much about cryptocurrency at this time. The reason, all of us are aware of it. Bitcoin and many other different digital currencies which are available. People are obviously trading and making money as well as losing money, correct? Yes, so all of us are aware of it. So I don't spend time on what is cryptocurrency and how it works, that mechanism, not necessary. Okay, right. Our focus is on accounting part, right? So how do I, if my company has cryptocurrency in hand, correct? So how do I present it in my financial statements, right? See, my focus will be as per IND AS or IFRS, right? Now, okay, as per IND AS or IFRS. Right. At the same time, most of the definitions also will work. Even for accounting standards, we can use it. Right. So cryptocurrency is an intangible currency. Nowadays, it is being used and people are exchanging goods also. Yeah, some of the companies are accepting cryptocurrency. I'm telling from international point of view. Maybe may not be from Indian perspective. Right. So let's see first what is it exactly? Can I treat this currency like a foreign currency or cash? Right, first question, if you want to say it's cash, right, is it the medium of exchange for the goods or services? Right, first thing, it is not exactly. Right, yes, I agree to you, some of the companies are accepting it internationally, but not all. Some of the companies are accepting means that is their choice. It is not mandatory for all the companies, correct? At the same time, it is not still recognized as a legal tender. Right. So that's why our answer is going to be no, it's not cash. Right. It cannot be, readily exchanged for any goods or services. Many companies are accepting, that's what I said, but it is not widely accepted and it cannot be treated as a legal tender. It's a choice of the entity if they want to accept, but it's not mandatory. Hence, I would like to say, no, it cannot be treated as cash. Then now, sir, can I treat it as at least cash and cash? No, cash equivalent. Right. If you want to look at cash equivalent perspective, first, what is the definition? Yeah, this definition is the same for accounting standard, IND AS, IFRS. So in IFRS, IAS 7 talks about this in cash flow statement. IAS 7, that is IND AS 7, talks about what is cash equivalent. Yeah, to say an asset is a cash equivalent, correct? To say an asset is cash equivalent. First, is it an asset? What is an asset? First, to recognize it as an asset, two conditions are supposed to be satisfied. First one is probable future economic benefits inflow, and the second one is it can be measured reliably. Done. Either cost or value. Correct. So when I say the probable future economic benefits inflow, yes, people are trading and money inflow is guaranteed. So there is no doubt about it. And I know how much, at least I know how much is the cost of it, and I can very much determine what is the fair value on a particular date. So as it satisfies both the conditions, it is an asset, no doubt. But can I classify it as a cash equivalent? Right. So what is the definition as per IAS 7 or accounting standard 3 or IND AS 7? It says it's a short term, highly liquid asset. Highly liquid means which can be converted into cash within 3 months. Plus one more, the important condition, what they say, which are subject to insignificant change in value. This is the crucial part with respect to our cryptocurrency, which is subject to insignificant change in value. But with respect to cryptocurrency, huge value difference will be there. Correct, no? Right. One time, like one Tesla owner, if he says something and the value is going down, up, and it's fluctuating, you must have observed this. So obviously we cannot treat it as correct. It is easily convertible, highly liquid. I agree to it. But the second condition doesn't satisfy. it is prone to a lot of chain significant fluctuation? No. Our answer is obviously going to be no. See, whatever I am saying, it's all already answered by IASB committee. Okay, I mean subject committee, right? So it's not whatever I am doing exactly, correct? Na? Right. Chalo. Next, can it be at least, sir? Can I? Okay, cash and cash equivalents? No. Can I put it under financial asset as per IND AS 109 or IFRS 9? Right. So first, what is the definition of what is financial asset? The financial asset. The financial asset is what? Financial asset is cash. We already concluded it is not cash, right? And the second one is an equity instrument in another company? No, we don't have ownership. Correct. Now, it doesn't create any ownership in another company, so it is obviously not an equity instrument of another entity. It doesn't create. Correct. And the third point, what I say, right? Do I have right to receive money, cash, or any other financial asset from other party? No, I don't have right to receive. It is kind of non-monetary asset. Correct. Now, I have cash means I have cash. I don't have right to receive from. I have money doesn't mean that I can get it from somebody else. As of today, I have cash means I have cash. I have asset doesn't mean the other person has liability. Correct. So other conditions, other definitions, other part also is there, but it is actually not going to match. That's why I didn't put it here. Fine. So is it? No, it is not a debt instrument. It is not an equity instrument. No, sorry. Obviously, it is not a financial asset. Okay, done. Then what is left for us? Right. Can it be an intangible asset as per even accounting standard 26 and IND AS 38 or IAS 38? Yeah, let's see first before deciding what is the definition as per the respective standard. The respective standard says what is intangible asset? Intangible asset is an identifiable non-monetary asset without physical substance. Correct. So when I say it is an identifiable, yeah, what do you mean by identifiability? Separability. Okay, separability means I can sell it, I can rent it, I can do whatever I want without the goodwill of the company. I mean, it is not attached to any other assets of the entity. Correct. This alone I can buy, I can sell, I can do it. So it is separable from my entity, right? So it is identifiable. First part of the definition, it satisfies. Next, non-monetary asset. Correct. It cannot create, it doesn't create any receivable or payable. So obviously it is non-monetary. Done. And without physical substance, yes, it is a digital currency. From the beginning we are saying, right? Obviously this satisfies, the definition of intangible asset is satisfied by our cryptocurrency. Okay, right? It is separable and correct. So that's why I can say a crypto, if you are holding cryptocurrency, it's going to be intangible asset for you. So how do I value it? Yeah, as per that, then you have to follow respective standard. Yeah, our IND AS 38 says you can, for intangible assets, yes, you can follow cost model or you can follow revaluation model. Cost means, right? If it is revaluation model, yes, the model can be applied for the entire class of assets. It's not only for one. Yeah, if you want to follow for all kinds, I mean, you can classify all kind of these currencies. You can put it under one head, and you can follow revaluation model within intangible assets. Agreed. And if you want to follow revaluation model, you have to measure it at fair market value. You know that fair market value is again referred to IND AS 113, that is IFRS 13, right? Yes. For this, obviously readily observable input is available. It's level 1 hierarchy. Correct. Yes, you can measure the fair market value perfectly like a share market. You can, I mean, very clearly, like any other currency, you can measure it. You can follow revaluation model without a doubt. But if you are following revaluation model, as you know, you are supposed to, I mean, the fluctuation gain or loss is supposed to be routed through revaluation surplus. It has to be routed through revaluation reserve. Got it? Done. That is the thing. That is, I mean, that is what the conclusion. Okay, first, and again, one more point of view you have to see. First, who are you? I mean, the company. What is the nature of the company? Depending upon that, we can treat it as an inventory as well. Okay, right. What is exact? Can it be an inventory? Yes, it can be inventory. That depends on what is our business model. Sir, I'm a commodity broker. Correct. Correct. I buy, I sell, and I buy, I sell. That is what my primary business. Correct. When I'm saying inventory, that must be your primary business. And you wanted to get the margin. That's what you're holding for that sake. Done. Under that circumstance, correct, na? Right. Inventory first. Let's see the definition. Inventory, as you know, inventory is an asset held for sale in the ordinary course of business. That's why I said, what is your ordinary course of business? It is always based on your primary activities, right? If you are into, correct, generally, right, if you are into which like you are into broker, trader, or something like for cryptocurrencies, even though IND AS 2 or accounting standard 2 says what, either measure it at cost or NRV, whichever is lower, this rule is not applicable for those broker trader, that is commodity broker, as per IND AS 2. There is an exception, that is exemption to cost or NRV, whichever is lower. Okay, these brokers can measure it at fair market value minus selling cost to sell, fair market value minus selling cost on the balance sheet date. They are not necessary to measure at cost or NRV, whichever is lower. Not necessary, because this is an exception given by IND AS 2. If I remember paragraph 3, somewhere ABC mein somewhere it will come. Okay, right. So that is what, my dear, this is the broker. Those who buy, sell commodities for others on their own account. Yes, the inventories are principally acquired with the purpose of selling in the near future. Correct. They don't want to hold like an asset and generating a profit from the fluctuation in the price. That's our margin. Correct. So when these inventories are there, this is an exception to our basic rule of IND AS 2. You measure it at fair market value minus selling cost. That's all, my dear. So it depends. Concluding, it's going to be an intangible asset. If your company is not into this broking business, right? If it is into the broking business, then they are supposed to classify it as inventory and measure it at FMV minus selling cost. Thank you.